This revision program is designed to help you with the revision of critical content and skills which will be taught in Term 3 and Term 4. The following topics will be covered in this revision program. For Term 3, we're dealing with economic pursuits, and the concepts we will be looking at within economic pursuits are wealth creation process, economic growth, economic development, and money and banking. In Term 4, you'll be dealing with contemporary economic issues, and they will be looking at globalization as well as the environmental deterioration. The program for this session, the content is summarized by theme or topic. Each theme or topic's questions consist of questions that will normally appear in Section A and Section B of the examination paper. Term 3 work will be concluded with the answer to an essay question as it appears in Section C. Each topic in Term 4 will be treated as an essay question. Please feel free to make notes and do not hesitate to submit questions if there is any ambiguity. Now, to master the topics of wealth creation and economic growth, you must be able to do the following. Number 1, describe wealth and income. A distinction must be made between wealth and income. Briefly explain the different sources of wealth. Briefly explain the methods of creating wealth through savings. Describe and explain wealth distribution. Describe and explain income distribution. Briefly explain the use of the quintile ratio and the Lorenz curve to measure income inequalities. Briefly explain the use of the Gini coefficient. Discuss the different methods used to redistribute income and wealth. And then lastly, critically evaluate the government's efforts to redress economic inequality. So as we go through the notes, please just bear in mind or hold in your mind these things which you need to master, because these are the kinds of questions you will be getting in a test or an exam. Right, number 1, we're dealing with wealth creation. So let's look at the definitions first of all. Income is the reward earned for the work of the factors of production. For example, wages, which is obviously for the factor labor, interest, which is earned by capital, rent is earned through land, and then profit earned by entrepreneurship. Wealth, on the other hand, is all the accumulated physical and financial assets which enable people, businesses, and government to earn an income. Some examples include stocks and investments, which are referred to as monetary or financial wealth, whereas property, clothing, and furniture is referred to as physical or real wealth. So your income is the reward which is earned by the factors of production, whereas wealth, on the other hand, is all the accumulated physical and financial assets. Where do we get wealth from? Right? So your sources of wealth is through savings, inheritance, or luck. And when we speak about luck, here you think of the lotto, you think of the jackpots or the casino, right? Wherever people can. Right, the methods to create wealth. Savings is equal to your income minus your consumption expenditure. So if you think about it, just should to say your savings is all unspent income. An increase in income can lead to an increase in savings or the purchase of physical wealth. So to increase savings, income must increase or expenses must decrease. Savings become wealth when the money is used to buy financial or physical wealth. So to just sum up, the way in which you can create wealth is, as I said, your unspent part of your income. So you can take that money and either just put it into a savings account in the bank, or you can use it to invest in stocks and shares, or you can use that money to buy a physical asset. Right, the unequal distribution of income and wealth. Income distribution refers to the way in which income is divided amongst households, whereas wealth distribution, this is the way in which wealth is divided among households. So how much inequality do we actually have? There are three methods to measure income inequality. The three methods are the quintile ratio, the Lorenz curve, and the Gini coefficient. Very popular 2-mark question. Name 2 methods to measure income inequality, and you can name any 2 of the 3 given there. Right, so in the quintile ratio, the population is divided into 5 equal groups according to the income they earn. Each group consists of 20% of the population. So, if you think about it, 20% times 5 is equal to 100%. Thus, quintile 1 will be the 20% group that earns the least, and quintile 5, the group that earns the most. There we have a table showing you the household income, the cumulative population, and the cumulative income. So we see quintile 1 is the poorest 20%, and they earn 5% of the income. Quintile 2, which is the next 20%, earns 10%. Quintile 3 earns 15%. Quintile 4 earns 30%, and the richest 20% earns 40% of total income. So if you look at that, you can see there that the richest 20% earns the most of the income, right? So the quintile ratio is used to measure the income inequality between different groups. And the calculation is as follows. You take the percentage income earned by the richest 20% of the population, in this case it is 40%, and you divide that by the percentage income earned by the poorest 20% of the population, and from our table that is 5%. So 40% divided by 5%, and that gives you the answer of 8, because the two percentages cancel each other out, and you've got 40 divided by 5, which will give you 8. This can also be represented graphically, and the Lorenz curve was developed in 1905 by Max Otto Lorenz, and therefore the name, the Lorenz curve, it is a graphical representation of the quintile ratio. And if you look at the graph that we have there, the important thing to remember here is obviously your labeling of your axes. So here we have the cumulative percentage of income, and then there we have the cumulative percentage households. So we've taken the table and we've plotted it on this curve here, right? So there we see, by plotting the cumulative income and population percentages, the intersections give a convex curve along OABCD. You see there, that's the curve that we got there. And that curve is what is then known as the Lorenz curve. At C, it shows that the poorest 60% of the population, there's the 60% of the households, right? They earn, so we go from C and you go across, and you will see they earn about 25% of income within the country. We have the 45-degree line here. This serves as a reference point and represents complete equality of income distribution, and therefore it is known as the line of equality, or it is called perfect equality. Along this line, the first 20% of the population receives 20% of income. If you come across from 20% of the income and you go down it takes you to 20% of the household. And if you go to 40%, they will receive 40% and so on. So the greater the distance between the line of equality and the Lorenz curve, so depending on how far away from the line of equality you are, that will show the greater the degree of income inequality distribution. So the area between the Lorenz curve and the line of equality, that is called the area of income inequality distribution. So if you see here, this line is even further than that line, so that would then be more, the income distribution is far more unequal. Right, the Gini coefficient. The Gini coefficient is calculated according to the information provided by the Lorenz curve. The Gini coefficient measures the exact degree of income of inequality. This is the ratio of the area between the Lorenz curve and the line of equal distribution, or the line of equality. So the value of the Gini coefficient can range from 0 to 1. A 0 Gini coefficient means that there is a perfectly even distribution of income. A Gini coefficient of 1 means that there is completely unequal distribution of income. So the higher the value, the greater the income distribution inequality. South Africa has a very high Gini coefficient, which indicates a very unequal distribution of income. As we said before, the higher the value, the greater the inequality. Another way to look at this, the closer you are to 1, the greater the inequality is. And the closer you are to 0, the more even the income distribution is. So let's just look at some stats quickly. So if you could fit the entire population of the world into a village consisting of 100 people, 6 people would possess 59% of the wealth, and they would all come from the USA. 80 would live in poverty. 70 would be illiterate. 50 would suffer from hunger and malnutrition. 1 would be dying. 1 would be being born. 1 would own a computer. 1, yes, only 1 would have a university degree. And as the learners always say, this is such depressing statistics that we're dealing with. And I said to them, it is not the subject economics that's depressing, it is just the topic we are currently discussing. If you have a full fridge, clothes on your back, a roof over your head, and a place to sleep, you are wealthier than 75% of the world's population. If you currently have money in the bank or in your wallet and a few coins in your purse, you are one of the 8 of the privileged few amongst the 100 people in the world. Right, uses of the Gini coefficient. The Gini coefficient is used to compare the distribution of income between different sectors of the population. It is also used to indicate the trend of income distribution over time. The Gini coefficient can be used by travelers to determine the state of a country's economy. Inequality in income of the poor and affluent groups in the community can be clearly observed. Right, there we have this line. It's like a sort of an imaginary line that sort of cuts the country into 2 hemispheres. And I asked the kids, what do you call this? And they said it's the equator. No, it's not. As you can see here, this line sort of includes Australia at the bottom here, right? And this divides that into the rich north. So although Australia is in the southern hemisphere, it is included with the northern countries or the rich north. And at the bottom here, we have what we refer to as the poor south. So this is what gave rise to the term the North-South divide. And the line that, or this imaginary line here, is known as the Brunt line. Now, if you think back to grade 9 geography, that is where you would have probably learnt that word, the Brunt line. Right, so the unequal distribution of income and wealth also occurs on a global scale. The imaginary dividing line between the North and the South indicates the separation between the richer and also more developed countries in the North and the developing countries in the South. The more industrialized countries in the North have a more equal distribution of income. The countries in the South are more dependent on primary sector activities and experience a more unequal distribution of wealth. So your southern countries are reliant on their primary sector, which means their main thing is like farming, mining, fishing. Those are industries which form part of your primary sector. Whereas in the North, they are more industrialized, right? So they're more dependent on a secondary sector again. Right, international redistribution methods. Right, the first one, taxation. High income earners and wealthy people are taxed to provide benefits and benefits in kind to low income earners and poor people. So what happens is the tax is taken from the wealthy in order to make things available to the lower income earners. Progressive personal income tax, this is when high income earners are taxed at a higher rate. And that's the system of taxation we use in South Africa, is the progressive income tax method. Wealth includes capital gains tax, which is levied on the profits earned from the sale of capital goods, such as property and shares. And then you have estate duties, where 20% is payable on the estate of each person who dies and whose net estate exceeds 3.5 million rand. So if you die and they add up everything that you own and it comes to the value of 3.5 million or more, then 20% of that would be payable in the form of estate duties then. So with taxation, you have your progressive personal income tax and you have your wealth taxes, which is your capital gains tax and your estate duties. Number 2, we look at the cash or social grants. Large sums are paid in social grants to support poor households. Examples of your social grants are your old age pensions, disability allowances, child allowances, and unemployment insurance. Natura or free benefits. Poor households receive free healthcare, education, school meals, municipal services, and infrastructure. Limited quantities of free electricity and water are also provided. Labor market policy, minimum wages, non-discrimination laws, and training subsidies reduce income inequality. Macroeconomic policy employment, the Extended Public Works Program, known as the EPWP, creates jobs for low-income households. And then we also have the regional development policies, such as SDIs, which aim to reduce geographical inequalities in income and wealth. So those are our international redistribution methods, which is the taxation, the cash or social grants, natura or free benefits, labor market policy, and the macroeconomic policy employment. Then we look at affirmative action in South Africa. Number 1, we have the broad-based Black Economic Empowerment, known as BBEE. The Broad-Based Black Economic Empowerment Act 2003 provides a legal basis for transformation of the South African economy so that the number of black people who make up the country's economy ownership, management and control can increase significantly. The Department of Trade and Industry, known as DTI, has published a scorecard used to measure empowerment and transformation progress of businesses and industries. Elements on the scorecards include stock ownership, management and control, employment equity, preferential procurement, enterprise development, and social responsibility. Now, when it comes to broad-based black economic empowerment, people get very confused. Most learners think this was created in order to increase job opportunities in the marketplace. That's not the idea. The main idea behind broad-based black economic empowerment is about, as it says there, the management and the ownership of businesses. That is what they wanted to address. And therefore, they've developed a scorecard so that they can measure to see how businesses, how they measure up to what is there. So you have to include part of your ownership, meaning your shareholders. There should be blacks represented on your board of directors. Your managerial positions, you should have black people as part of your management. With preferential procurement, you've got to make sure that your suppliers are black-owned businesses, and that with social responsibility, that you are doing something to help uplift the community as well. The second policy that South Africa has introduced was the land restitution and land redistribution. And the purpose of land restitution is to return land to those who lost it as a result of racially discriminatory laws and practices after June 19, 1913. Right? That's when the Land Act was imposed. So land redistribution focuses on land for both residential as well as productive use. Although there have been some successes since 1994, very little land is still in the hands of very few people. And even with the residential property where they've discovered, yes, this property, and people could show the proof that the property belonged in their families, and government, and obviously the property is now being developed and used for other purposes, so government has promised to pay them whatever the current market value of the property is, but those wheels turn very slowly, so people are still waiting to see the money owing to them. Housing subsidies. Housing subsidies are used to help low-income earners to own property, and the government housing scheme provides funding options to all persons earning less than 3,500 Rand per month. Right, let's look at the consolidation questions. Give one concept for each of the following descriptions, and please note, acronyms and abbreviations will not be accepted. Assets which exist physically and that you can touch. Assets which exist physically and that you can touch, those are called real assets. A single digit between 0 and 1 that indicates how unequal the distribution of income is. Now remember, to measure the inequality of income, there were 3 methods we spoke about. We spoke about the quintile ratio, the Lorenz curve, and the Gini coefficient. So one of those 3 is a single digit between 0 and 1. And the one that the answer that we're looking for here is Gini coefficient. How does wealth differ from income? This is what we started our talk with, and we said that your income is what is paid to your factors of production, whereas your wealth, on the other hand, is the accumulation of your assets. Right, so income refers to compensation received for the provision of the factors of production, while wealth refers to stock of a person's financial and real assets. Explain how the market system can exacerbate inequality. So the word exacerbate means, how does the market system promote inequality? What is it that the market system does that will just make inequality even bigger? So if you think about the market system, this is where demand and supply does everything. There's no government intervention or anything like that. So the market system compensates production factors unequally. High income people are better off accumulating other financial and real assets. So this increases the degree of inequality of wealth. Because remember, as I said, your market system, it is all about demand and supply. So it is only going to supply the needs of those who have. So it is creating a bigger rift between the haves and the have-nots. Briefly explain how wealth is created through savings. Now remember what I said, savings is your unspent income which you can then use to invest. So savings are unspent income. The equation for savings is your savings is equal to your income minus your consumption expenses, and an increase in income can lead to an increase in savings or purchase of physical wealth. And to increase savings, income must increase or expenditure must decrease. Right? So either you've got to adjust what you're spending your money on, or you must be able to increase your income. Savings only become wealth if the money is used to buy physical or financial wealth. Study the graph and answer the following questions. And there we've got the graph, and by now you should know the name of the graph that you are looking at. So the question here is, which economic concept is represented in the graph? And you should know that it is the Lorenz curve. Provide a name for line A. I don't know if you can see here, but that says A there. And this is, what did we say? This was the line of equality, right? That is known as the line of equality. Which of the two countries have the lowest inequality rate? Please note the lowest inequality rate. Now remember, the further you are from the line of inequality, or the further you are from line A, the more unequal. But the question is asking, which of the two countries have the lowest inequality rate? So therefore that one would be A, because the Lorenz curve is closer to the line of equality, and that is your motivation there. What percentage of income is earned by 50% of country B's residents? So if I go here, that is where 50 is, and I go up to B and I go across, then that should give me more or less what the earnings are. Okay? Oh, sorry. 50% of, 50% of the country, right? So they earn approximately 70% of income. 50% country B, they earn, if you go across, not 70, it's more like 10% of the income, sorry. Explain the relationship between the Gini coefficient and the Lorenz curve. The Lorenz curve indicates the degree of inequality, whereas the Gini coefficient is the ratio of area between the equilibrium line and the Lorenz curve. Right, we move on to the next topic, which is economic growth. And the definition of economic growth is an increase in the production of goods and services in a country over a year. Economic growth is measured and expressed in terms of real GDP. Now, we make a distinction between real and nominal GDP. So it is the real GDP, which is your GDP after taking into account the increase in the general price level. And when you think of the increase in the general price level, that is known as inflation. So your real GDP takes inflation into account. So you cannot measure economic growth just by looking at your nominal GDP. And how do we calculate this? So to calculate your economic growth rate, you take your real GDP in year 2 minus the real GDP in year 1 over the real GDP in year 2, and you times that by 100, because then that will give you a percentage. Right, the importance of economic growth. Achieving a high economic growth rate is one of the 5 most important objectives of South Africa's macroeconomic policy. Now, it is not only in South Africa that we are concerned with economic growth, but economic growth is something that I think is on any country's or one of the macroeconomic objectives of any country, because economic growth contributes to the general welfare of the community. The methods that we can use in achieving economic growth. The first one we look at there is the increase in productivity. Now, when you think of the term productivity, here we refer to the efficiency of your factors of production. Okay? So increase in productivity means that more production is produced with the same amount or less input than before, right? So it is taking your factors of production and just using it more efficiently. The second one, availability and utilization of production factors. So economic growth can occur when the working population increases faster than the total population increase. In other words, that more jobs are being created, or the jobs are created at a faster rate than what the population is growing. Soil can be used for new purposes that produce better yields, for example, for cultivating canola rather than wheat. And when it comes to capital, capital must be broadened and deepened. That brings us to the concept that you did in term 1, capital widening and capital deepening. When it comes to technological change, as new production methods are developed or more efficient ways exist to run a business so that more goods and services are produced with the same input, then that means the technology has improved. Effective government and administration policies. The government must have policies that will achieve more exports, growth in tourism, and the expansion of the manufacturing industry. And then also your effective administration means that policies are implemented in a way that minimizes time wastage, inconvenience, and cost. And the last way to get your growth going is through investment. Okay? And obviously, when you think of investment, you think of investment in terms of capital goods, that there are more suitable equipment available to workers. And also, if you want to increase your investment, you need to increase your savings, okay? Because that is the way in which you can create make money available for investing. So the methods of achieving economic growth is increase in productivity, so making your factors of production work more efficiently, availability and utilization of production factors, making more efficient use of your factors of production, technological change, finding new ways of producing with the same inputs, effective government and admin policies. Government must encourage exports and manufacturing, and then investment, we need to encourage savings so that there's money available to invest in capital goods and to get the correct goods available for the workforce. Then the limitations to achieve economic growth, the things that sort of hampers economic growth. The first one there, low savings and investment levels. We put the two together because, as we said, savings are needed to finance investment. So if we look at savings, household savings are too low to achieve an annual growth rate. And the reason the household savings are low is because those with a low income make up the bulk of the population and do not have enough income to save. This is what we call where people lead a hand-to-mouth existence. Whatever they earn, they need to use that money to satisfy their basic needs and wants. They don't have any leftovers to be able to put away. The second point, investment. South Africa's fixed investment rate is too low to create economic growth, mostly due to our low savings rate. So the two goes hand in hand. Number two, insufficiently qualified labor. Highly skilled workers are on demand in South Africa but are not available. And the reason for this is twofold. First one, school education. The number of candidates who qualify for admission is too low. And the second point is school literacy and numeracy rates are low. Then the other reason for the insufficiently qualified labor is the apprenticeships. Too few candidates pass the apprenticeship test, so the number that qualifies is too low to meet the needs of the economy. Number three is HIV/AIDS. South Africa is one of the highest HIV-infected populations in the world. So the economically active population has a high infection rate. Once people become infected, they become less productive, and when they die, their knowledge and experience are lost. The government must spend money on healthcare to treat infected people, so there is less money available for economic growth policies. So this has a negative impact on savings, taxes, as well as profits. So the three things that limits our growth is, first of all, the low savings, which then leads to not enough money available for investment. Secondly, the insufficiently qualified labor as a result of the school education and the apprenticeships. And the third point is the HIV and AIDS, because the working population is decreasing and government has to spend money to treat infected people, which makes less money available to spend on other things. South Africa's recent economic growth experience. South Africa's economic growth rate was 0.8% in 2018 and a negative 2.1% in 2019. So it is too low to achieve a better standard of living of people. A sustained economic growth rate of 6% has been identified as a minimum to significantly reduce unemployment. And if I recall, at the beginning of this year, experts were saying that we're looking at a 3% growth rate. So it's still not enough in order to reduce unemployment. The per capita income, our real per capita income is equal to the real gross national income divided by the total population times 100, and this is what is used to determine the standard of living. Right. Give the consolidation questions for economic growth. Give one concept for each of the following descriptions, and please note once again, when it comes to this question, acronyms and abbreviations will not be accepted. The income per person in a country, what is that known as? That is your per capita income. The policy to promote black ownership and shareholding in the South African economy, broad-based black economic empowerment. Please note that you have to write that out in full. You can't just put triple BEE, right? You've got to write broad-based black economic empowerment. Taxes and government spending are used to influence economic growth. So you see there your fiscal policy, because if you think about it, taxes and government spending, those are the two things which make up your fiscal policy. What effect do low economic growth rates have on the economy? How does a low economic growth affect your economy? So your low economic growth leads to declining demand for goods and services, which reduces the demand for factors of production. So obviously, if the demand is declining, then businesses are not going to need to produce or supply as much anymore. So which means that reduces the demand for the factors of production, and this causes lower income and profits for businesses, and this then leads to less economic development as well. What impact does the extended public works program have on the local community? Remember, we said the EPWP is there to provide jobs for the lower income earners. So jobs are created for the most vulnerable members of the local community in order to provide an income and reduce poverty. Why are savings necessary to improve the quality of life of a country's inhabitants? And please note there, it says 4 times 2, which means you must give 4 points, and each point will be worth 2 marks to give you the 8. Right. Savings is the source of investment. Investment leads to job creation and economic growth. And if there's more money flowing in the economic cycle, which indicates increased demand, production and supply of goods and services, and then people's ability to raise their standard of living improves. Right, the next section we're coming to now is your economic development. And to master the topic economic development, you must be able to define and explain the relevant concepts. These are very important for your Section A questions, knowing your concepts, being able to define and explain them, because they will give you in your 1.2 that match the column, or 1.3, so they'll give you a description and you must be able to recognize it. You must be able to compare economic growth with economic development, a very popular 8-mark question. Discuss economic growth and economic development. Briefly discuss the methods to increase economic development. Discuss the characteristics of developing countries. Compare the characteristics of developing and developed countries, and the implementation of various development strategies. And then we're also going to look at the North-South divide, and we look at the importance of indigenous knowledge systems, also known as IKS. Right, so we start with economic development, and there we look at economic growth versus economic development. Remember, I said to you this is a very popular 8-mark question, and you can answer in table form as it is here, right? So economic growth exists when there's an increase in real GDP, whereas with economic development, on the other hand, this exists when there is an increase in real per capita GNI or real per capita GDP. Economic growth implies an increase in the capacity of the economy to produce more goods and services, whereas economic development, on the other hand, implies an increase in the capacity of the population to produce more goods and services. Economic growth focuses on increased production within the country, whereas economic development focuses on standard of living improvement. So the one hand, you've got your economic growth, which you look at real GDP, whereas for economic development, you look at per capita GDP. Economic growth, you're looking at the increase in the capacity of the economy, whereas for economic development, you look at the capacity of the population. The third point there, economic growth focus on increased production, whereas economic development, the focus is on the improvement of the standard of living. Right, development methods. Number 1, attracting new businesses in order to create employment opportunities that promote diversity and economic growth. So you want to attract new businesses so that there is more being produced, you're diversifying what is being offered, and also with more goods and services being offered, as we just said there now, if you are able to produce more, this leads to economic growth or indicates economic growth. Building community capacity by developing people's skills. So economic development happens when people are able to do more. Expanding local markets promotes local products and exports, right? So instead of just producing for the local market, you will be producing for both the local and international markets as well. Transforming outdated facilities so that it can meet new needs of the local community. Promoting direct investment with the upgrade of infrastructure and building new facilities to create more jobs. And number 6, natural resources must be used effectively to improve people's standard of living. The characteristics of developing countries. Note, developed countries have opposite characteristics of developing ones. For example, developed countries have high per capita income. Okay, whereas your developing countries will have lower per capita income. So the first characteristic we're going to look at there are the low living standards. So the population per capita income is low. There is a low growth of per capita income, greater unequal distribution of income between the rich and the poor. So in other words, the gap is quite wide between rich and poor. Income inequality is measured by the Gini coefficient and quintile ratio. More poverty indicated by a low standard of living. Low life expectancy due to malnutrition and diseases. Low levels of education result in limited or no work opportunities. So that's the first characteristic. Second one, low levels of productivity. Output per worker is lower due to lack in management, lack in education and training, and malnutrition in childhood. So people haven't developed physically. Number 3, high population growth and dependency. Birth rates are very high and mortality low due to poor access to healthcare, meaning people die early as well. Children under the age of 15 represent almost 29% of population and are dependent on adults to meet their basic needs. High levels of unemployment, underemployment. We've got to make a distinction between these two concepts, underemployment and unemployment, right? Underemployment exists when people who are working less than they are able to. For example, or maybe sometimes not just are they working less, but they are overqualified for the job that they do. And then unemployment, people who are able to work, want to work, but they cannot find work. Because please remember, there are those also who just don't want to work. So they're not unemployed because they're not even bothering to look for a job. Dependence on primary sector. Primary goods are the main type of production and export, right? And then poor infrastructure, deficient infrastructure such as roads, healthcare facilities, and transport. So there we have 6 characteristics of developing countries, and the 6 characteristics are low living standards, low levels of productivity, high population growth and dependency, high levels of unemployment, dependence on primary sector, and poor infrastructure. Grade 11s, it's important that even if you just learn the 6 headings there, that at least, and then you can just do the discussion within your own words, right? Right, we're looking at development strategies, and here once again we're looking at the rich north and poor south, right? So if you look at your development strategies, the first one we're looking at is human resources, which refers to the workforce, and it is the most important asset of a country. And the way in which you can improve your human resources is through education and training, health, population planning, and motivation. So improvement in literacy levels contributes to economic growth and development. Economic growth because now you have productive workforce, and development because people are educated and trained, they are able to access jobs, they can earn better salaries, so obviously their standard of living will also improve. Healthy people are more energetic and productive and contribute to economic development. Unplanned families are mostly the main cause of poverty and unemployment. Human resources need to be motivated and must strive for self-improvement. Capital. When a country increases its stock of capital, it is known as capital formation. Capital formation can be increased by increased voluntary savings, increased forced savings through taxation, attract foreign investment, negotiate foreign loans from development institutions such as the World Bank. Technology. Technological development makes a country more competitive. The expansion of communication, example, computers, can improve the productivity in developing countries. Science education must be included in the school curriculum to train technicians and engineers. Natural resources, known as land. Land ownership is a strong incentive for improving the quality, and minerals and fuel the establishment of secondary industries that can process primary products, thereby adding value. Another term that we give to this is we say we want added value exports, meaning not just exporting raw materials, but exporting processed goods, right? And then lastly, entrepreneurship needs to be encouraged in order to ensure that a country develops. A country can only perform well if managers or owners are willing to take risks. So if you look at your development strategies, what you're actually looking at are your factors of production, because human resources is your labor, you've got capital, you've got natural resources, which is your land, and you have entrepreneurship. And then the fifth one that we've added there is technology. So that's the way you can remember what are the development strategies. Right, what has South Africa done in order to improve its development? Right. The macroeconomic policy. South Africa is a developing country, and since 1994, the government has pursued an economic development policy. The Reconstruction and Development Plan was the original route map, and this was then followed by GEAR and strengthened by ASGISA. Then the new growth path was adopted and established in 2010 with a focus on economic growth and job creation. And currently, we are now following the National Development Plan, was announced by the Planning Commission in 2011. And the focus of the new development plan is on the challenge of reducing poverty and income inequality in South Africa. And even though we've changed economic policies, and it's important, don't think, now why do they change all the time? You have to change because you have to adapt to what is happening. But they haven't thrown out the baby with the bathwater, because if you look around you, the RDP housing program is still happening. GEAR, the focus was on the attraction of foreign investment. That's still ongoing, right? With ASGISA, they developed GIPSA, which is still being used. So with each of the policies, there's something that that was held back and still being pursued. Right, supplying basic needs. All people have certain basic needs without which life would be impossible. So to meet these needs, the South African government does the following: build RDP houses for the needy, pay social grants every month, and this is growing, send underprivileged learners to school for free, funded nutrition schemes, and provide subsidized water, electricity, sanitation, garbage removal, housing, and food. And then economic development, what South Africa has done in terms of economic development, they've looked at the regional development, and here we look at the SDIs, or Spatial Development Initiatives, which are spatial areas that offer particular benefits to mining, manufacturing, and other businesses. The benefits include the presence of existing or potential infrastructure and specialization of products and or services. Businesses in the SDIs qualify for a variety of financial aid, for example, based on establishment costs, number of people employed, and skills training. Provincial and local authorities are responsible for this. Then for our export industries, they've established the IDZs, which stands for Industrial Development Zones. These are industrial areas created for a specific purposes, which are physically surrounded and connected to an international airport or harbour. There are 5 IDZs that have been approved. We have Kuche, which deals with steel and auto parts. East London, motor vehicles. Gauteng, high-tech and light industries. Richards Bay, the coal, and Saldanha Bay, steel. International competition or global competitiveness. We've got the IMS, the Integrated Manufacturing Strategy, that was established in 2001. With regards to human resource development, economic development emphasizes an increase in the capacity of the population to produce more goods and services. For example, after 1994, education was served equally to all. SETAs were established, and SETAs is short for Sector Education Training Authority, were established to facilitate vocational and technical training. Promoting freedom of choice. For real development, people should be free to choose, example, their jobs and careers. So the Employment Equity Act number 55 of 1998 prohibits unfair discrimination, and the Consumer Rights Act number 71 of 1988 protects the rights of consumers. Economic intervention by the government. The South African government intervenes in the economy for three reasons. Number one, to strengthen the functioning of markets. Secondly, to promote economic growth and development. And lastly, to ensure a redistribution of income and wealth. Right. Moving on to IKS, also known as Indigenous Knowledge Systems. Right. Economic development. Rural communities depend on indigenous knowledge for survival. Development processes. Indigenous knowledge systems address poverty in local communities and is recognized, valued, and appreciated nationally and internationally. Problem-solving strategies for local communities. Local communities utilize indigenous knowledge to solve problems that concern them, example, pest and weed control. Local and global communities. The impact of sustainability could be effective if they adapted to local indigenous practices. Livelihood of the poor. The lives of the rural poor depend on skills and knowledge that is specific to the area and essential for survival. Right, the consolidation questions regarding our economic development. How can technology accelerate economic development in South Africa? Right, technology makes the production process more cost-effective, which makes countries more competitive on both the local and global markets. So this can lead to export promotion as well as import substitution. Now, just export promotion is when you're encouraging exports, and import substitution is when you're discouraging imports. What is the main objective of the National Development Plan, which is our current economic policy? It is the reduction or eradication of poverty and income inequality. Why are indigenous knowledge systems important to local communities? We've just done that just before this. It includes traditional activities such as agriculture, healthcare, and grooming. Social activities, we're talking about cultural and religious activities of communities are recognized. Here we see the principle of Batupele. Recognition is given to the political or authority system of communities. Local communities are consulted in decision-making regarding conservation and commercial projects. IKS is increasingly being protected as intellectual property. And there comes the famous 8 mark I was speaking about earlier on. Differentiate between economic growth and economic development, and it says 2 times 4, right? So which means you get 4 marks for discussing economic growth and another 4 marks for discussing economic development. So economic growth refers to the increase in real GDP, that will give you 2 marks. This implies that the economy is able to produce more goods and services within a certain period of time, which will give you another 2 marks. Economic growth indicates increase in the real GDP per capita, and this refers to the capacity of the population to satisfy more of their needs. Sorry, it seemed to have cut off the economic, this here is the economic development. Oops, sorry, let me just go back. This one here should say economic development indicates an increase in the real GDP. Right, so what we've done so far now, we've looked at the creation of wealth and income, we've looked at economic growth, and we've looked at economic development. We will look at money and banking, which is still part of economic pursuits, and contemporary economic issues in the next session. We've now come to the end of session 1, and I will see you in the next session again. So we're going to take a short break now.